Good evening, traders. Welcome to 7MinuteMarket.com, utilizing technical analysis to predict direction based on human emotion. Today is May 17, 2012. This analysis is for entertainment purposes only. I do not and or will not make any recommendations to buy or sell anything. This is simply my opinion. All right. So I guess in this video, I'm going to probably go a little bit longer than 7 minutes. And every time that we make a little bit of a profit, it's kind of like my reward that I can go a little bit over 7 minutes because I just love to talk. Anyways, we have a lot to cover. Let's just get. All right, the first chart we want to look at is the SPY, which is the ETF that follows the S&P 500. Here we have a very, a sharp down move today on much higher volume, and the volume is actually very, very high. So it could indicate an exhaustion volume. To be honest, if it hits this mathematical calculation sometime tomorrow, then I may take a position to the long side simply because we're oversold. We're in this pivot point here. We're in this mathematical calculation. The farthest we're going to go is probably to this 200 moving average. My stop will be below this 200 moving average, and my gains will be all the way up here. So if we end up somewhere down here, a little bit of a pierce of the mathematical calculation, then our risk reward would definitely make. Now again, that's the thing. I mean, we need to come straight into it. I mean, if we gap below it, then I probably won't take the trade. If we open up down here somewhere and then we just go right into it and then we kind of pierce it a little bit on a Friday, tomorrow is the Facebook IPO, obviously, so we may get a little bit of a bid. But if we never even get here, or if we consolidate a little bit first, then I will not take the trade based on this mathematical calculation. I'll actually wait till it reaches this 200 moving average at very least. I mean, I might actually wait until it gets to this gap fill first before I take a long position on the SPY. Okay, I did say last night that I was expecting somewhat of a bounce on this level because it was a gap fill and we didn't even get an intraday bounce. So I mean, the markets are just in a very weak state right now. All right, now take a look at this chart. This chart is of the dollar, and in the previous videos I talked about this mathematical calculation here at around the $85 range. In addition to that, we also had, and let me just load the drawings here, these resistance lines here. This one I should just keep deleted. Right now we're coming right into this resistance point here, which is in my opinion, a pretty powerful resistance line. We should at least be getting a small pullback off of that. Now, yesterday, excuse me, yesterday I thought that we would probably hit this line today. However, we didn't get close. I mean, we ended up right here. We still haven't tagged this line, which caused the market to obviously drop even more. So if tomorrow the market drops to that mathematical calculated line and the dollar bounce, has this some sort of reversal candle or some sort, or higher volume or something, then chances are that Monday, obviously, if there's no issues coming out of Europe over the weekend, we should actually see a bounce sometime next week. And that's the US dollar. This is a chart of the VIX, and last night I talked about the VIX coming up, doing at least a 50% retrace of this to this trend line here. Then we got a pop, and I wasn't really sure if this was consolidation period or not. However, it obviously was because we just shot up on the VIX. The VIX is the fear index, so we can obviously tell with the issues going on with the government and Europe and whatnot. I mean, everybody's afraid and everybody is just bailing out of the markets, and that's why the markets is just tanking. However, we should find some resistance at the 200 moving average plus the 382 Fibonacci retracement. In addition to that, we do have some levels of resistance here, like this pivot point, and we also have this consolidation period here. So there's going to be some pretty good resistance at this point here, and this kind of coincides with the actual dollar itself. So if the dollar goes up just a little bit and hits its resistance line and bounces off, and as well as the VIX, if the VIX comes up tomorrow and hits its resistance area and then bounces off, then we should see the markets have a small bounce sometime either Monday or Tuesday. If we do, however, get a bounce tomorrow based on the IPO for Facebook, then all bets are off the table. Okay, just plain and simple. We would have to reanalyze and relook at the charts. I'm talking about if we go straight into these levels, then going the opposite direction for a quick bounce or a retrace would be valid. All right, this is the chart of the GLD. I talked about the GLD last night. Last night, I talked about the GLD coming into this mathematically calculated level here. We had a lot more volume than normal. At least within the past 3 days, it was a lot higher. We did have other resistance points too. We had this pivot point here. It didn't quite get there though, but that really didn't matter because as long as this mathematical calculation is right around the support line or the support area, then I'll take the trade right at this mathematical calculated level. So far, it's been doing fine. I mean, nothing's perfect, obviously, but I took the trade to the long side on the GOD, like I mentioned last night, and then I was greatly rewarded today. I did mention last night that I was thinking, I didn't think it would actually get this high, to be honest. And I did say that I would stop out at this level just to get out of the market because this is a counter trend trade in a weak market. Even though that the gold I thought was oversold, it wasn't that oversold. I mean, it was overextended obviously, but it wasn't that oversold. So the point being, I actually got out at this area here. I had no idea that it would actually do a gap fill, but that's actually what it did before I pulled back. Now, here's the thing about gold. Let me load my drawings here. Now, you see gold has reached this gap fill resistance point. We also have another resistance point at this pivot here. However, I did a calculation or a recalculation, I guess you could say, because now we actually are turning the opposite direction. And I do have a calculated level right here. Okay, this level is exactly at 156.32. So I put an alert here at 156.05. So when it does alert me, I'll be ready to take the trade to the short side on gold. I have a feeling that this 20 moving average, if gold, now again, these mathematical calculated levels are only based on if it goes right into it. I mean, if you consolidate a little bit first, all bets are off the table. As you can see, gold just came straight down right into it without any consolidation period, which is why I went long on gold. Okay, if it had consolidated right before here, then I wouldn't have gone long. Okay, same with to the upside. Right now, gold is doing a retrace. I don't think it's a pivot point to making new highs. I don't think the trend is going to change just yet. However, it's doing a retrace, and based on the retrace, if we say start consolidating this way, next week, I might still take it at this level, but say we go a little higher on Friday, and then on Monday we do a little retrace and start consolidating, then no, all bets are off the table. This mathematically calculated line no longer is in play, and I'll have to recalculate for another line, a line a little higher, maybe at the 50 moving average, if that's what the mathematical calculation creates. If the mathematical calculation creates it at the 200 moving average, then I'm not taking it until there. That's just simply I have to follow the rules, and that hopefully will keep me out of trouble. But that's the analysis on GOD. If you are in GOD, then obviously you want to put a break-even stop. That way you protect yourself, because again, this is very volatile markets. I mean, the GOD could just come straight down tomorrow. We just don't know. If it does come straight down tomorrow without a significant was that bounce or indication of a reversal, like say we just dropped down tomorrow and this was just a fake out, and fake outs often happen during the week of options expiration. Okay, obviously the institutions want to whip people in and out, and this could obviously be everybody short gold obviously, and then they pop gold up even though the markets were down. See, this is the awesomeness about technical analysis. Even though the markets were heavily down and gold was following the markets, today gold obviously just went the opposite direction. As much as the markets went down, gold went up. Now this could basically also be the institutions trying to whip people out from continuing to go short on gold. By doing this, they stop people out who are short, and then the next day and then they stop people out going short because they bring it all the way up here, and then people turn their shorts around and go long because they think gold's going to go higher, and then they whip them right back down again. Okay, so that is a possibility. However, if we do not and we continue higher and we go right into this level, I may have to look at it, but I would definitely consider taking another short at gold at that point. Okay, but right now I won't be looking at gold until it gets closer, and so I probably won't be talking about gold in future videos until it gets closer, or if the pattern starts looking better. Now, because the markets are just tumbling down, like it's just like just tumbling down, it gives us opportunities to catch bounces on other stocks as well. This is a stock on Caterpillars, or on the code CAT, and I do have a mathematically calculated level here at 84.12. We do have resistance here at this pivot point, and the mathematical calculation actually drew a pretty nice support line right at this consolidation period here. So basically, to make it simple, we are in this down channel here, except we've broken down from the channel, which is, this is obviously unsustainable in my opinion. So it's gonna start trading back into the channel eventually. So again, just like the GLD, if we come straight into this area right here, right into the mathematical calculation, then I will take the trade to the long side. Okay, and again, just like gold, I'm in and out because it'll be a counter trend trade, and then we'll just wait patiently until we get around, the top trend line here, or another mathematical calculation, or maybe when these moving averages start kissing each other, I'll take another short on Caterpillar, and hopefully maybe we can even get all the way down here, or at that point we'll be able to take a trade all the way down here, and I'll obviously hold my positions longer on the short side because we're in a downtrend. All right, so this is a stock on Apple. Apple has just been continuing down here. I know I mentioned that I didn't think it would come straight down into this level, but the more I look at it, the more it looks like it wants to do it, and it's so close already. This level here is priced at 516.88. I mean, if it gets to 516.88, I might actually consider pulling the trigger on Apple to the long side, for a day or two, or maybe something on intraday. We do have a level here on this pivot point on Apple here, but I mean, for Apple to come straight down into here without having some sort of pullback first, which I think would be around this area here, unlikely, but with the markets being as weak as it is today, it is a possibility. So I have an alert set to 519.82, so to give me enough time that if it does hit the price of 516.88, then I will be in Apple on the long side. Okay, now here's an example of what I'm talking about, coming down straight into a level. You see how it came, for USO, it came down and consolidated a little bit and it came down. It would have been okay if we came right into my level today. But because what happened was we actually opened down here, and we traded all the way up here, right? Oh, I'm sorry, we actually opened up here, my bad. We opened up here, and then we traded intraday, and then we closed all the way down here. Let's take a look here to get a better understanding. Because we've already had somewhat of a bounce in this area, I mean, the candle is obviously red, but we did have somewhat of a bounce. This to me could potentially turn out to be a consolidation period before heading lower. Therefore, if we do tag this line tomorrow on the USO, I will not be taking this trade, as even if it comes into this calculated level, and even though USO has been oversold, or I should say the USO is oversold. And to be honest, while I'm looking at it, it still does look like it came straight down into this mathematical calculation. So there is a there's a probability that it will bounce off of this level here. I mean, I would actually wait for the 618 Fibonacci retracement just to be sure, but there is a possibility that we may get a bounce right around this area here. And the only reason why I say that is because my next mathematical calculation ends up all the way down here, which tells me there is a chance that we can get down here, but a straight shot down, just not likely. So you know what, but there's better charts out there. When I'm kind of like, it looks like it might be consolidating, there's better charts out there, like Caterpillar, for example. So this is an example of what I do. I mean, if it consolidates before a level, then I will not take the trade even though it hits that level, because even though it does bounce off that level, the chances or the odds have been decreased. And again, it's all about putting the odds in your favor. You want to be the house. You want to be the guy who's able to count the blackjack cards, and again, you're not going to win every hand, but because you can count cards in blackjack, you're putting the odds back in your favor, and that's really how you want to play the game. Okay, this is your 7-minute market update. God bless to you all. Thank you very much for watching, and we will see you in the next video.